This is the first of a set of 4 presentations looking at the funding for your undergraduate degree by the University of the West of England, UE Bristol. It is an overview only, so it's important to check your own entitlement with Student Finance England. Here is a guide to the fees undergraduate students at UE Bristol will be charged for courses starting in September 2017. As you can see, if you take a year out on placement with industry or to study abroad, you are not charged the full fees for that year. Tuition fee loans. If you are a UK or EU student in full or part-time study, Student Finance England will provide you with a tuition fee loan which is paid directly to the university. It does not depend upon household income. If you already have a higher education qualification or have already started a higher education course, you may find that you are not entitled to a tuition fee loan. We'll now look at living costs funding available to UK students, how you can fund rent, food, and other living costs. Here are some suggestions as to where your funding may come from. The government will provide you with a set amount for your living costs, which they describe as a contribution, so you may need to find income from other places. Make sure to watch the other presentations for more information on additional funding from the university and on student budgets to see whether you might need to consider part-time work. Maintenance loans. The government will pay you a maintenance loan which is paid termly. There are 2 levels of loan. A lower loan if you continue to live with your parents while studying at university, and a higher one if you move away. If you are a lone parent or in receipt of certain disability benefits, you may be entitled to a larger loan. Longer course loans are in addition to the maintenance loans, and are available for courses longer than the 30 weeks maintenance loans are paid for. As you can see, if you're doing an NHS healthcare course, this additional loan is a significant amount worth including in your budget. The tuition fee loan you get regardless of your parent or partner's income. When it comes to the maintenance loan and the longer courses loan, your household income can affect the amount you are entitled to. The first thing to establish is whose income is going to affect your entitlement to the maintenance loan. If you're under 25, the government still considers you the financial responsibility of your parents. They will ask you for details of your parents' or adoptive parents' income. If your parents do not live together, it will be the parent you have lived with most recently that will count. If that parent has a new partner, it will include the step-parent's income as well. In all cases, you as the student will also have to disclose information on your unearned taxable income. If you are under 25 and wish to establish financial independence from your parents in the view of Student Finance England, there are some circumstances where this is possible. If you are responsible for a child, if you spent time in local authority care, or if you've fallen out permanently with your parents and have third-party corroboration. If you have supported yourself for 36 months prior to the start of the course, you're unlikely to have to provide the income details of your parents. However, you are likely to have to provide evidence of your income covering the 36-month period. So that's whose income is taken into consideration for your maintenance loan. Now we'll look at what income counts. If you're under 25 and dependent on your parents, you'll have to provide details of your parents' gross taxable income for the year 2015-16, so 18 months before you start your course. If that taxable income has reduced by 15% or more in the meantime, for some reason such as your parents retiring, you can go back to Student Finance England to ask for a current year income assessment. This will mean that they will look at the current tax year instead, so in this instance the financial year ending April 2018. This will mean your funding is based on an estimated income, so what your parents have earned up to when you request the current year assessment. Student Finance England will also ask for an estimate of your unearned income as you start university. For most students, this will be a zero entry at this point. So to bring that all together, this table is a guide to how much maintenance loan you can expect to receive once the household income has been taken into account, and what this works out at on a weekly basis. On the left-hand column, we have your household's gross taxable income. That could be your parents' or your partner's gross taxable income. If your parents are on means-tested benefits, their household income is likely to be below £25,000, which will trigger the maximum maintenance loan of £8,430 if you are living away from your parents while you study. That works out at an average of £210 a week for the academic year. If your parents earn over the £25,000 threshold, you will see that your maintenance loan entitlement reduces until you reach the household income threshold of £62,000, at which point it stops decreasing. At this point, you would have an average of £98 a week to spend. As it's means tested, Student Finance England doesn't take into account your household outgoings, so it doesn't look at your parents' housing or travel expenses. It's important, therefore, to have a talk with your parents to find out if they will be able to help with the shortfall between your maintenance loan and your living costs. That's the end of this presentation. The next presentation will cover how to apply for your funding and the additional support you might be entitled to from Student Finance England. For more information, see the links below.